We start off with breaking news from GM. Shares on the move after the company set new targets for revenue and operating margins. Let's get straight to Phil LeBeau, who's in Warren, Michigan, with all the headlines from the Investor Day. Phil.
Melissa, we're getting a little more clarity from CFO Paul Jacobson about how General Motors plans to double its revenue annually by 2030. As you take a look at shares of General Motors, ticking a little bit higher after hours, a couple of things to keep in mind from the targets that have just been set out. They do plan to double their annual revenue to about $280 billion by 2030. They get there by taking 140, which was the annual revenue pre-COVID, and they say, look, we think we can double it. They're targeting margins of 12 to 14%. And the EV revenue by 2030, $90 billion. For a point of context, they only expect to be doing $9 billion in EV revenue in 2023, a couple of years from now. Targeting $20 to $25 billion of that revenue that they plan to achieve by 2030, that will be coming from services and subscriptions. And that's been a big part of the theme today, that they really want to use services and subscriptions for people who have a new electric vehicle or an autonomous vehicle service from the company. And they also plan to lead the U.S. in EV sales, which has people saying, well, can they get there? Take a look at GM and Tesla, and these stocks, no comparison over the last couple of years. In terms of market share, there's also no comparison at this time either. We asked LMC Automotive to run the numbers. In 2021, Tesla controls 63% of the U.S. EV sales. General Motors is number 3 in the U.S. with 9%. They've got a huge hill to climb to catch up with Tesla. CEO Mary Barra tells me they think they can get there because they will be able to have a broader portfolio of vehicles, and that portfolio will appeal to more people, and over time, that will help them increase their sales. And finally, as you take a look at shares of General Motors, I want to keep you posted on what's happening with Paul Jacobson. They just finished a question and answer session. He's coming right here to our camera. We will be talking with him first on CNBC coming up in, about 45 minutes. We'll ask him some of these more detailed questions. But, guys, there's no doubt that General Motors is trying to leverage all the investments it's making, $35 billion in electric and autonomous vehicles, and they believe that they can leverage that into people buying electric vehicles and, more importantly, using those vehicles for subscriptions, whether it's on a monthly basis or a new service that they will pay for to run through that vehicle. Guys, back to you.
Phil, does General Motors have the battery capacity, the supply, if you will, to guarantee that they can actually reach these goals?
They say they will have it. Look, they're building 4 battery plants. 2 of them have already been announced. One that'll open next year in Lordstown, Ohio. Another one in Spring Hill, Tennessee, that will be opening in 2023. 2 more that have been announced, but they haven't told us the sites and exactly when they will come online. Look, the real ramp up is going to happen 2025 to 2028. That's when you're going to see a slew of electric vehicles coming online for General Motors, being offered for sale, and you'll also have these battery plants as well as their final assembly plants. Either they're currently building electric vehicles like Factory Zero, or will be in a matter of months, or they will be retrofitted, so taking existing final assembly plants, and as EV sales ramp up, they will convert those, either all of them or part of them, into electric vehicle assembly lines.
Phil, and one last question. You said GM is number 3 right now in EV market share in the U.S. What is number 2?
Volkswagen, 11%. So right now you've got, and those guys are 1, 2, 3 worldwide, by the way. They are 1, 2, 3 worldwide. They're 1, 2, 3 here in the U.S., but make no mistake, Tesla is way ahead, 63% market share. And we asked LMC Automotive, where do you think Tesla is by 2030? And they said, look, they won't have as much market share by 2030, but they still will have a very strong market share by 2030, in their opinion.
All right. Phil, thank you. Phil LeBeau. We look forward to the interview with the CFO of GM. That's first on CNBC here on Fast Money. Tim Seymour, how do you trade GM? The stock didn't move all too much on all this news.
Yeah, we've heard a lot of this news, right? And also, when someone tells me something's going to happen by the end of the decade, and it's early in the decade, like the decade almost just started, I think there's a lot to prove here. I think GM has a lot to prove. I think GM has already made a significant commitment to autonomous. I think the putting the money after the EV business, and again, some of the software and services. Look, the announcement that BrightDrop, which is their last mile EV services business, is going to be a $10 billion revenue business by the end of the decade, really exciting, but a long, long way to go. And I think that's, what I said yesterday was The market almost values GM now like their core business, the internal combustion engine business, actually has a very limited terminal value, and at some point it's going to be obsolete. Well, GM knows that, and I think all of their profession about they are going to be X by X is great. Look, 90 billion from 10 billion in EV revenue by the end of so from 23 they expect to be roughly 10 billion in EV revenue, 90 billion by the end of the decade. If you want to do the math and have some fun with this, Tesla's somewhere around 48, 49 billion estimate sales in 2021. That's not necessarily all EV sales; it's some of their other services too. But and Tesla's a $772 billion market cap. So clearly, they're two companies that are valued very differently. They probably should be. I've certainly pointed out that I think Tesla at times not really an auto company based upon that valuation. But this is GM's day, and it's great news. But haven't we heard a lot of this news before? As a GM bull and owner of the stock, great stuff. I think they need to put their head down and continue to do this.
The concept of recurring revenue, Karen, seems very appealing, even though this is sort of a long ways off, as Tim would put it. But let's say we get to 2030 and they checked all the boxes. Does it deserve a Tesla valuation?
It doesn't need to get a Tesla valuation to have it be a good do from here. I don't know if it does. The other part of that, it's an excellent question. What's the Tesla valuation at that time if GM does all the things that GM says they can do, right? So Tesla's not going to have a 46% better market share than GM at that time if GM can do what it says. I agree with Tim, though. I mean, GM is a show me story, even when they show the numbers right now, and still. So, it still trades at a low multiple. So the idea that we're going to jump on and get really excited about 2030 is sort of hard to fathom, because even right now, when they put up very good numbers, I feel like it doesn't really get so much respect. But I remain with Tim, bullish, long. I would have thought they have been sort of telegraphing this, but I thought those were good numbers. We'll see. We'll see. I think we're going to get a few cars. I'm really interested in how the Lyric does, which is their Cadillac EV that's coming out in 2022.
Guy, does your thinking around GM change much versus 24 hours ago, now that GM has put forth targets for 2030? I mean, could you put out targets for 2030 on your lot? I mean, that's a long ways off, is the point.
Yeah, I actually could. I'll be 97. I'm sure I'll have like a name tag. No, the short answer is absolutely not. But let's give them the benefit of the doubt. First of all, Karen mentioned Show Me Story. They should move all their EV facilities to Missouri. That would be brilliant. We're moving to the Show Me State, and we will show you, folks. I mean, I don't know if GM is watching, but that's pretty clever, if you ask me. And if double revenues by then, that sounds great, but really what you're talking about in that period of time is 8.5% growth rate-ish, which is fine. So you have to ask yourself, the question you asked Karen, do they deserve a Tesla valuation? Absolutely not. But based on that growth, what is the right valuation? And I would submit it's not where we are now. It's somewhere closer to 10 or 11 times earnings, which, again, gets you, given the $7 they're going to earn-ish, a $70 stock. I don't think that's implausible, and I think that's pretty realistic given the environment that we find ourselves in.
I mean, the Tesla valuation has a little bit of, pixie dust, if you will. I mean, it's got a lot of these other sort of bets, the battery technology in terms of the power wall and other uses of the battery technology, not just an auto company, Steve. I'm wondering what your thoughts on Tesla are, given the low valuation that GM and Ford, throw Ford in there too, have.
Right. So Karen brought up an interesting point, and I think this is the only thing that you can glean from any of this, is that when we get there, Tesla is at 63% market share now, I believe Phil said. So that market share is going to drop from now till then. That's my takeaway, whether it's fact or not. That's the way I look at it. Having said that, I think it is pretty exciting when you look at a company like GM talking about $2 billion in revenue going to $25 billion by 2030 in basically services. That we've seen what they can do with OnStar. Now they're going to integrate Alexa, which they've done already, into the car. So I think they're doing all the right things. The stock is up 30% year to date. Are people going to get excited about it now, to Tim's point, when it's 2030? No. But do you feel like they're making the right moves and skating to where the puck is going to be? Absolutely. Having said that, Ford's chart looks better technically, and we haven't heard anything about what they're going to do by 2030, or we haven't focused on it myopically. But the stock is up 60% year to date. But the way you started the question about Tesla, it's whack-a-mole. There's too many things that go into the calculus of how Tesla is valued. So do you sell Tesla on the fact that they're not going to have 63% of the market share? No, because then there'll be a bullish note coming out about Tesla's battery storage. So Tesla has figured out how to crack the code. Given all that, Tesla stock is only up 10% year to date. It's a high growth name, high multiple name. So there's something to be said for switching out of Tesla, going into a battery company, and going into a GM and a Ford, playing all the different roles that Tesla currently does.
I want to ask the shareholders, because we will have the CFO on Fast Money in a First on CNBC interview. Karen, what would you ask them? What do you want to know at this point?
I'm curious as to whether or not they'll reinstate the dividend, right? They used what I thought was an opportunity to just hoard the cash during the pandemic, and I don't know what that, so I'm interested in that. I don't know what the right answer is to that, though. On one hand, I think you've got a giant CapEx spend for the next several years in front of you. What is it, 30-some-odd billion dollars? Maybe don't pay a dividend, or just pay a very small one. I'm curious about that capital allocation.
Tim, how about you?
I want to hear a little bit more about the potential vertical integration between kind of hardware, software. Some of the things, by the way, that have insulated Tesla during some of these chip shortages. That has been one of Tesla's benefits, and that they are more vertically integrated, whereas a lot of the partial builds for the OEMs are related to, they just don't do half, they're not in half of these businesses. So what are they going to have to spend? What's the timeline for that? And then again, back to those EBIT margins, 12 to 14%, great. Is this linear? Are there economies of scale that are needed to get there? Do we get there quickly? The profitability here is very important. And again, do they sacrifice profitability to get there with all this CapEx? I hope not. In the past, GM has done that.